Hi, and welcome back to the third lesson of our mini course, Accounting Made Simple. I'm Agnieszka, and today we're continuing our journey through key business finance concepts. Today we will talk about the break even analysis, an essential tool for any business. This tool tells you how many units of your product or service you need to sell to cover your costs, or simply, it's a point where your revenue equals your expenses. Understanding your break even point is crucial because it helps you to determine whether your business is viable and how much you need to sell to avoid a loss. The break even point is a point where total costs equal total revenue. At this point, you're not making any profit, but you're also not losing any money. Once you pass this point, any additional sale is profit. Before we discuss how to calculate it, let's consider the following key terms. Fixed costs. These are your business expenses that stay the same no matter how much you produce, like rent, salaries, and insurance. Then we have our variable costs, and these are costs that change with production, like your materials needed to make a product or packaging. So, how do we calculate the break even point? The formula is fixed cost divided by sales price per unit less variable costs per unit. This gives you the number of units you need to sell to cover all your costs. Alright, let's walk through a simple example. Imagine you own a small coffee shop and your fixed costs like rent, utilities, and employee salaries add up to 5,000 per month. Your variable cost per cup of coffee includes ingredients and packaging and totals 2, and you sell each cup for 5. Using the break-even formula, we have 5,000 divided by 5 minus 2, which is around 1,667 cups. Therefore, you need to sell approximately 1,667 cups of coffee in a month just to cover your costs. Once you hit this point, any additional sale will contribute to the profit. If you don't sell enough cups, your fixed and variable costs won't be covered and you'll end up with a loss. This example shows how crucial it is to know your break-even point. It gives you a clear sales target. You can now plan your sales and marketing efforts more efficiently to ensure that you meet this target and ideally exceed it. Just to sum up, understanding your break-even point is essential for making informed decisions about pricing, sales strategies, and cost management. It helps you to identify where profitability starts and ensures you're aiming for the right sales target to keep your business financially healthy. If you need additional guidance on how to calculate the break-even point in Excel, I left a link to my guide saved just below this video. Alright, in our next lesson, we will take a step further by exploring the difference between margin and markup, two concepts that will help you refine your pricing strategy even more effectively. See you then!